Quick little trade recap. I took one trade today. It was a long on NQ and it was a win. So let's get into that right quick. So going into today, I was extremely bullish. Now, why am I bullish? So on the 4 hour here, as you can see, NQ has recently swept out this low, and we put in a bullish SMT because as you can see, ES came nowhere near this low. So bullish SMT gets put in, sell side gets swept. Now, what is the reaction of this SMT getting put in? Clear and obvious displacement higher, which tells you what? The next form of buy side liquidity becomes the draw, right? You don't need to overcomplicate the bias. If we swept out sell side, SMT gets put in, and then bearish fair value gaps start getting disrespected, then the next form of buy side liquidity becomes the draw. So all of these internal highs get ran. We run through this 4 hour, and now we're clearly heading towards this high. And like I said, going into the day, I was extremely bullish because of all those reasons. And like low key, like don't overcomplicate your bias. Like I saw a bunch of people like that were like leaning real bearish today, like before this ended up happening, before we got this move right here. So let me just low key go to right here. Before this happened, I saw people leaning bearish simply because we are in this 4 hour. We were like heading up to towards this 4 hour. But look at the bigger time frame. Like it's very obvious that this is bullish with that sweep. And notice ES as well. Obviously, like I said, ES had the SMT, but also ES gets internal manipulation at this low. So ES sweeps this internal low, and ES is also holding this daily for value gap here. So as you can see, this daily bullish for value gap gets tapped on ES. We sweep out these daily intermediate lows, and then just obvious heavy displacement higher on both assets. ES runs through the 4 hour. So like I never overcomplicate my bias. If I see that we've swept sell side, we're coming from a key level, there's a bullish SMT, and then I see a big 4 hour bearish for value gap get ran, it's very obvious to me that we were bullish and the market's going towards the next form of buy side. So yeah, uh, basically all that to say my bias today was bullish. So at market open, I was pretty much like we were like right here, and I basically just needed to see a rebalance to some form of key level because like okay, so when I'm bullish here, where do I think we're gonna go? Am I thinking that like one little move lower at market open is gonna send us all the way up 350 points to the next like obvious swing high? No, I'm simply looking for the next like buy side level that the market could go. Like, what's the next target? And then I see this untapped 4 hour for value gap, right? Because notice there's no real imbalances here. There's like this one for value gap here that ends up getting displaced through. But the next obvious target for price is the untapped for value gap. So at market open, we're right here. And I'm like, okay, I want to see the market go here, but we need to rebalance into some form of key level before we see a move higher. So what is the key level? I identify this price leg here, which this is a valid price leg. Like, why is this price leg supported? Because look at the 1 hour. We tap this for value gap here, and it also taps this 15-minute here beautifully. So this price leg, I mean, it's just simple. Like once again, don't overcomplicate things. What are we doing here? We're moving from internal range liquidity to external, and then vice versa. So the market displaces higher. We put in swing high. We sell off into internal liquidity, which is this for value gap. This for value gap holds. The market displaces higher, targeting external liquidity, which is this high. Once the high gets taken, we start to slow down pre-market. Then at market open, what do? We get manipulation lower into what? Internal range liquidity. We tap equilibrium of the price leg perfectly. So equilibrium gets tapped. We tap the 1 hour. This is also a 15-minute right here, as you can see. Market taps the 15-minute. So we're moving back from external range liquidity to internal range liquidity. And then ERL holds bullish, and we see a move higher towards IRL. And that on the lower time frame becomes a market maker buy model, as you can see here. So at market open, like I say, this is the candle. We immediately just sell off, and this is the 1 hour that I had marked out. Like when I said, okay, I want to see us go to the 4 hour, but we need to manipulate into some form of key level. This is what I had marked out. And then as you can see, we tap it. And then I took my actual entry itself was this 30-second IFVG slash CISD. So we had this 30-second change in the state of the delivery here, and then this candle here closes above this 30-second bearish for value gap, turning it to an inversion. And I'm simply targeting up here at the 4 hour. And I mean, yeah, that's pretty much it. Pretty dang simple today. Like once again, this is a really clean internal market maker buy model, as you can see. And this is exactly what, like these buy models, you want to see them like in relation to time and price. So at 8:30, what happens? Like look at where my cursor is. At exactly 8:30, the market sells off. We sweep out both of these little internal lows here. We sweep out all of these lows here. We tap the 15-minute for value gap. We tap that higher time frame key level. And then what else are we doing? We are tapping, like I said, equilibrium of this price leg perfectly. So I mean, hang on, look how perfect this is. When the market taps it by like 2 points. So when you see market open, sell off into that key level with a higher time frame being bullish, and then you see just immediately strong displacement higher with this IFVG and change in the state of delivery, it's very obvious that we're going to the next form of buy side, and then on the bigger time frame, the next major key level, which is the 4 hour fair value gap. So yeah, that was today's trade. And like I said, don't overcomplicate the bias. When you see on the 4 hour that market has swept sell side, we have an SMT, we're displacing higher. Just know that it's very, very, very likely that we're going towards the next form of buy side. And if this is too far, like it was today, like I still don't think we've got there. Yeah. So if at a market open, which was like right here, it's still 350 or 400 points away, then just simply you can look for intermediate highs or fair value gaps. So like intermediate highs are highs inside of imbalances. Like this here is a 1 hour intermediate high because we have a bearish 1 hour fair value gap. So this could be a very good target. Like say the market, like look, like on this day, for example, at 5 a.m., what does the market do? We put in a high here, see this little internal high, but then we fail to take out this intermediate high. So we're generating buy side liquidity. Market sells off into what? Internal range liquidity. Why is this internal? Because it's a fair value gap. So the market sells off towards this fair value gap, and then we get a move towards what? External range liquidity. So let's say this was like, 8 a.m. market open, 8:30 a.m. You could look to target an intermediate high being this. You don't have to target all the way up here. Like just because this is the drawn liquidity overall, you can't expect one little move at market open to give you that entire move. So just go for the low-hanging fruit, go for what's obvious. So on this day, if this were at market open and I saw that we were coming from this fair value gap, internal range liquidity, targeting external range liquidity in the form of this high here, and then also this intermediate high, then this would be my target. But today, for example, I see that at market open, we are right here. We have just displaced higher. We have left a fair value gap. We have the 4 hour untapped. And then I simply just wait for the manipulation at market open and then target the 4 hour. So yeah, I know I yapped a lot, but just trying to really get my point across that you don't have to overcomplicate your bias. Just pay attention to order flow. Where is the market delivering from? And how are we treating fair value gaps? If we're delivering from sell side and we are disrespecting bearish fair value gaps, the draw on liquidity is bullish. If we are delivering from buy side and we are disrespecting bullish fair value gaps, the draw on liquidity is bearish. And with these lows, like all of these bullish fair value gaps here, let's go to the 4 hour right quick. So like what do we do here? We sweep out internal buy side liquidity. We tap these fair value gaps here. And then what is the market right here? This will flip and work. So we tap these fair value gaps. We sweep internal buy side liquidity. And then what does the market do? It displaces lower through what? Bullish fair value gap here and bullish fair value gaps here. So what does that tell you? When we're delivering from buy side and we're displacing lower through bullish imbalances, what does that tell you? That the draw on liquidity is bearish. So the market takes sell side liquidity, but now that sell side's been taken, what does the market do? We get displacement higher, and we're now displacing through bearish imbalances. So what does that tell you? The draw on liquidity is bullish. So these intermediate highs here, this high here, and then for today's target, the 4 hour fair value gap. So yeah.